I want to bring in Larry Shover. He's the managing director of Exchange Capital Resources to help us take a look at the retail sales number and the PPI for that matter as well, Larry. But let's begin with retail sales. The focus on the consumer, certainly amidst the pandemic, has been one of the major focal points. Can you talk to us about, well, how the markets seem to be shrugging off another disappointing data point? We're talking retail sales, which declined. The core down 1.4%. Retail sales month over month down 0.7%. Are we at a point where we should be concerned, Larry? Indices don't seem to be still.
No, they're not. And it definitely is going to feed or fuel the fire for GDP January 28th. But, you know, the market right now is just shrugging these things off. It's reflation or bust, and it continues to be reiterated that the Fed's going to do whatever it takes to, drive nominal yields and depress real rates. And so that said, other things seem to be driving the market right now, and that's inflation expectations, yield curve, and what that's doing to the equity narrative. But all that to say, the retail sales number, people thought it was going to be not so good, worse than expected. You'd think the market would react a little bit differently, but right now I think the market's indifferent to data, and it's just tired and just waiting on that reflation trade that we continually talk about.
Sure is. One thing that one could argue, though, is, well, first and foremost, I want to point out not only the numbers here this month come in a little bit worse than expected, not what investors wanted to see, but last month's actually got revised down as well, which we can get into in just a second here. But, I'm starting to think about if President-elect Joe Biden is able to effort through the stimulus package that we were talking about at the top of the show. I mean, that could turn things around quite a bit and quickly, I would imagine.
Yeah, I think so. I mean, there was definitely a remarkable indifference to the $1.9 trillion proposed package. But that said, I think we're in this area in the market where bad news is good news. When you have bad data points, perhaps that's going to open the gate for more and more fiscal stimulus, and perhaps this 1.9 trillion proposed stimulus package will be closer to getting passed, because I think the market realizes that this just can't go through both the House and the Senate without some type of back and forth. And so it probably greases the skids a little bit, and I think bad news ends up being good news right now.
Yeah, I mentioned at the top of the show how this one's for sure to receive some pushback. This is kind of just a starting point in terms of the discussions. I would think there's going to be some negotiation, to say the least. All right, Larry, let's dive into the PPI number, because this week, in terms of consumer price index, no real concerns there, kind of feeding into the narrative that you and I have discussed multiple times in terms of what investors have their eye on and, well, the lack thereof in many cases, in this case, certainly, which continues to be the case. Let's talk about PPI, Producer Price Index, this morning, and I'm looking at it here right now. Looks like the core came in year over year at 1.2%. It looks like month over month coming in at 0.1%. PPI month over month 0.3, and year over year 0.8. Again, inching up slightly, but it doesn't look like anything to be too concerned about here. It looks like that core actually was in line with expectations and mostly flat after last month.
Yeah, and that's interesting, and perhaps that's what's promoting the two drivers that are in the market right now, and that is like inflation expectations on the rise, at least compared to nominal rates, and then the yield curve, which is, in my view, driving a lot of things, including the equity theme. We talked about the Russell. It's not so much driving the whole growth into value, but it is driving certain sectors of the market. Metals and mining, et cetera. The whole emerging market theme. So all that to say, it's not surprising that number came in line, just because it is like driving what's driving the market right now, or at least it's unfolding what's driving the market, and that is inflation expectations on the rise and the yield curve continuing to stabilize.
Before the break, we were talking about some technical analysis with Rick DeCat. We talked moving average and how those are lagging indicators. This economic data is a lagging indicator as well. We have to acknowledge that when we're talking about these numbers. I guess when I ask that, my question is, when we see commodity prices like we have seen, soybeans, energy markets, we've been talking about, well, we looked at copper with Rick as well on the move higher and trending higher and well bid. We're talking multi-year highs in many cases. I mean, are these lagging indicators about to start to turn here? Do you personally, Larry, expect to see this inflation narrative become, well, a little bit of a different discussion? We've been talking about how we haven't been able to manufacture it, or find it, create it. I guess I'm wondering in the new year, with all this stimulus, with, well, this proposed 1.9 trillion, are we going to start to see on the producer side, the consumer side, wage inflation? I mean, are you starting to see any signs?
You know, I think it's way too early to draw conclusions, and I know I'm overstating the obvious on that. And also, you know, reflation is the it trade for this year. And we're definitely seeing signs of that, as you just rattled off: copper, iron ore prices, etc. But that said, I think, you know, I personally don't think we'll see the kind of inflation that the Fed wants to see. I mean, they've been very good at trying to manufacture it. And they've staved off disinflation, which is hugely important, but they have not been able to promote consumer-led inflation. And so with all the what-ifs in the market, the shifts in economic and fiscal and political policy, the disruption in the global supply chain and trade, that has not been even close to being resolved. And then lastly, capital inflows, and that's is what we might be seeing with regard to copper and iron ore. So it's so early to tell. And, you know, I hate to put a wet blanket on things, but I just don't see the inflation coming the way the market is hoping for. Maybe not expecting, but hoping for.
Talk to me about what you're seeing in terms of some of the markets. We mentioned, again, some of these commodities that have been on the move higher. Crude oil has been getting a little bit of a lift. We heard from the EIA this week. We heard from OPEC and expectations there. But we've been watching some draws in inventories. The bid in crude, though, Larry, one thing that stands out to me this week is it's coming with a dollar, which has been firming up some. So it does sort of feed into, again, the discussions that we've been having as far as stimulus measures to come. And, again, expectations that demand's going to get better at some point down the road.
Yeah, and you know, it's really comforting to see WTI priced where it is today. I mean, it truly is, and it kind of goes against my overall narrative that we're not going to see this growth in inflation anytime soon. So it's good to be wrong on that. But like, you know, the overarching, you know, EIA report was good, but actually it wasn't great. I mean, we're still, 9.8% over our 5-year average in oil. Distillates came out, inventory was double what they expected. Gasoline was higher as well. And so floating storage was like 2 times what it was even a month ago, global floating storage. So it's hard to say, but right now, like, oil is just being driven a lot just by the reaction in the dollar and credit spreads, and not really demand led right now, because, you know, the demand is just not there. And there's still those unknowns with inventory or production coming out of OPEC, and also especially Russia.
Let's talk a little bit about the metals, because while gold hasn't been providing a lot of directional conviction, one could argue that, again, in theory, it's sort of supporting the narrative, again, that investors expect conditions to better. I mean, ultimately, it certainly seems like if gold was expecting a lot more stimulus to come, it'd be bid. I mean, it seems to have priced in a bit of a best-case scenario here, one could argue, but certainly not really seeing much in terms of that fear factor, that concern related to, well, being used as a hedge with the indices at all-time highs. I guess with gold right at this 1850 level, you mentioned how crude's comfortable around this $50 level. What are we seeing here as far as where things stand right now? You can see on the chart here, this is the daily time frame. We've been in this range basically since, that spike that we saw up to 2100, basically since this summer. Last summer, I should say.
No, exactly. Last summer. You know, gold right now is wrestling on whether it's a commodity or a currency, and you know, I think that's what we're seeing right now. But also, we have to keep in mind that gold is, you know, somewhat linked to inflation, and you have break-evens right now within striking distance of their October 2018 high. You know, pretty close to 211. So that's going to affect the momentum in gold. And you offset that with the fact that 10-year yields are only, nine basis points away from their local high. Back in October 2018, 10-year yields were over 3%. So gold doesn't, it's not out of the ordinary for it to be trading where it is today, given break-evens, given dollar has been on its back foot, and credit spreads are pretty tame right now.
Larry, I wanted to get your thoughts lastly on Bitcoin. I mean, that's another one that's been attracting a lot of attention, and it does seem to be kind of, the gold discussion provides a little bit of a segue into what's been playing out here in terms of crypto, because, well, we certainly have looked at how a weaker dollar seemed to support Bitcoin futures, and everybody ties it to the gold discussion. I guess with this kind of, parabolic type move that we've seen, where do you stand on this discussion? I mean, we heard from not only the FOMC recently about it, we heard from the ECB, Christine Lagarde, even this week had some comments related to, but this seems to be propping up in many discussions in terms of that we've been having not only here on the show, but also in terms of what I'm hearing in the financial community in general. This one's kind of really attracting a lot of attention, and you can understand why with the move up through 40,000 recently.
Yeah, it lost all of its attention when it was down to 5,000, of course.
True, good point.
Yeah, and with that said, I think that the market's still evolving and trying to figure out what it is. And to me, it just casually looking at it, I just feel like it's a sentiment indicator. It's gaining interest just because there's so much speculation in it. We're in the early stages of perhaps what will replace our currency. That might happen in 10 years or in 100 years, who knows? But all that to say, it seems to be tied to different things at different times. And so I'm very wary of it. I don't trade it whatsoever. I definitely watch it, but I'm watching more on what impacts it. Is it just sheer speculation? People buy it just because it keeps going up? Or is it really a sentiment indicator with regards to all the distortions in our world with global supply chains, political changes, capital inflows, who knows? So all that to say, I stay away from it and watch it from a distance. All
right, certainly a speculative and a volatile product as well, and something to keep an eye on. But as Larry mentioned again, and I agree with, and certainly have echoed at times, it's not necessarily the most directly correlated or well-established products in terms of related to some of the markets that we were just discussing. Larry Shover, really appreciate you joining us here, ladies and gentlemen. Larry is the managing director of Exchange Capital Resources. Have a wonderful weekend, and Larry, look forward to seeing you back here in the near future.